Thank you for joining me for today's episode of the Simply Financial Podcast. I'm your host, Christopher Calandra, and I want to increase your financial IQ with today's episode, which is going to be a little bit of a history lesson, providing hopefully some worthwhile perspective. So the basis for this is that on August 5th, 2024, the Dow Jones Industrial Average had a very bad day. It fell 1,333 points. That created quite a stir with some sensational media headlines and talking heads that made it seem like the sky was falling. With this decline, it brought the Dow Jones Industrial Average down to 38,703. About a month before that, the market hit an all-time high, somewhere over the 40,000 point mark. On that day, not only did the Dow Jones fell, but most stock market indexes fell as well, including the NASDAQ and the S&P 500. So I bring this up because it's a jolt to see the market. I'm using the Dow as a proxy for the market in this discussion. It's jolting to see the Dow go down 1,000 points. For most of my career, as an example, anytime the market went down 100 points, I took note of it. So if I was traveling on business or in client meetings and I saw the market was down 100 points, my next question would probably be, what happened? What is the market worried about? What was the negative news? The perspective I want to provide for you, though, is that today, a 100-point move is about 0.2%, whereas most of my career, a 100-point move was fairly substantial from a percentage point of view, but a 0.2% movement is inconsequential when you look at all of the days of the down market activity year over year, going back some 100 years. So to further the history, the Dow, when you look at it, and you look at the top 5 big percentage drops, the biggest percentage drop ever was the crash in 1987 that happened on October 19th. The Dow Jones fell 22.6%. Just a jaw-dropping, stunning decline. The thing about it, though, is that was a 508 points decline. So we just had a 1,033 point decline. But in 1987, the biggest percentage drop ever was 22.6%. That was a drop of 508 points. That brought the Dow down to about 1,738, where on August 5th, it fell to 38,703. So that's an indication of how good the market has done over time. The Dow has gone from 1,738 in 87 to 38,703 in 2024. The second biggest percentage drop ever was more recent. It was March 16th, 2020. The market went down 12.93%. That was a drop of almost 3,000 points. And that drop brought the Dow down to 20,188. Let me give you one more. The third biggest percentage drop in Dow history was October 28th, 1929. That was part of the market crash that led to the Great Depression. The Dow on that day fell 12.8%, but that was only 38 points. Isn't that incredible? That brought the Dow down to 260. By the way, the next day, October 29th of 1929, the Dow went down another 11.7%. So it went down almost 25% in just 2 days. So what I'm driving out with this little bit of a history lesson is that even though the 1,000 point drop that we saw recently was jarring, I used the term jolting a moment ago, and it caught my attention, it caught most people's attention, but that drop was 2.6%. So what I want to draw your attention to is the history that markets do have volatility. We have 10% drops, 12% drops, 22% drops. There's been 15 times where the Dow has dropped more than 1,000 points before it happened on August 5th. So history shows that this is not abnormal. But increasingly, with the Dow getting higher and higher over time, the points play a psychological trick on us. Those of us that have been around a while, like I've been in the business 30 plus years now, is because 1,000 points seems way more dramatic than 2.6%. 2.6% is notable, to be sure, and it was not a fun day. But history is littered with times when the market went down 2.6%. In fact, there's 20 times over history where the S&P 500, I'm switching gears on you a bit, 12 times in history of the S&P 500 when it dropped 20% or more. So what I would draw your attention to, all of this to say, is that I would encourage you to focus more on the percentages than the points to avoid the mental trick that might befall you and get you more nervous and angst than you ought to be. 2.6% is way less scary than the 1,333 point drop might indicate for many of us that have been a while, and 1,000 point drop used to be a 10-point drop, a 5-point drop, even a bigger percentage drop. So focus on the percentage. That's the message today. I'm not sure by the time this is published what the market would have done. But again, the history lesson is this isn't terribly abnormal, and avoid the mental trick, the mental trap of following the points too much and getting a distorted view of things. A 2.6% drop is not good, but it's not the sky is falling. It's not the end of days. Historically, it's not even that noteworthy. So I hope you found this quick history lesson and perspective point of view to be valuable. Please check out our website, www.elliottwealth.com. Find more information about the work that my team and I do here at Elliott Wealth Management, helping our clients win with money, including tackling topics like the history of markets and keeping things in perspective. And I'll also ask, as I usually do, to subscribe to the podcast if you haven't done so already. Thanks for listening to today's episode. I will be back with you on the next episode of the Simply Financial podcast very soon.
The views expressed are not necessarily the opinion of Osaic Wealth, Inc., and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned herein. Investing is subject to risks, including loss of principal invested. Past performance is not a guarantee of future results. No strategy can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information should be relied upon when coordinated with individual professional advice. Please note, the information being provided is strictly as a courtesy. When you link to any of the websites provided here, you are leaving this website. We make no representation as to the completeness or accuracy of information provided at these websites. Nor is the company liable for any direct or indirect technical or system issues or any consequences arising out of your access to or your use of third-party technologies, websites, information, and programs made available through this website. When you access one of these websites, you are leaving our website and assume total responsibility and risk for your use of the websites you are linking to. Securities and advisory services are offered through Osaic Wealth, Inc., member FINRA, SIPC. Insurance services offered through Elliott Wealth Management Services, LLC, not affiliated with Osaic Wealth, Inc.